What's going on, guys, and welcome back to another video. So over the last few days I've been looking at new stocks to add to a new portfolio that I'll discuss in a few days. But again, it got me thinking, and today we're going to be making a video on 5 things you should consider before buying any investment, either stocks or ETFs, as a long-term investor. So with all that being said, let's dive right on into today's video. Just to give some context before we get into the 5 points, at the moment I currently have one portfolio with 33 holdings, all blue chip diversified stocks. Again, we have about €10,370 at the moment in this portfolio, and we're up €1,796, or just under the 21% mark. So the first point you need to consider when investing as a long-term investor, and it probably is quite obvious, is that you need to set a goal before you even start. Now, this is the same as it is even in a marathon. If you're running or even investing, you need to have a start and finish line and a means of getting there from the start to the finish, and your kind of plans to get there. Now, this will all depend on your risk tolerance and what you expect to gain from this investment. Now, certainly once I started investing in this portfolio, this is definitely one goal that I kind of overlooked at the start. Now, if I was beginning again, I wish I knew this rule or kind of goal, to have a set goal in mind, because again, you need to know when to get out of a stock as well, even as a long-term investor. Like, for example, some of my stocks now are nearly hitting the 100% mark. So maybe is that the time to start selling out of some of those stocks to take the gains and then putting it into some of my worst performing stocks. So definitely, rule number 1 is you need to set a goal before you even buy a stock. Now, by setting a goal, it kind of gives 2 main objectives here. Firstly, it kind of gives you an idea of what style stock or ETF you need to invest to get to that goal or to achieve that goal. For example, if you're looking to gain 100% in a few weeks, that's not going to happen from a blue chip stock. So you probably need to start looking at penny stocks or more volatile stocks in order to achieve that goal. And also, if you're just looking for maybe 10% a year and consistent long-term investing, like most ETFs, then again, you can consider some of the blue chip ETFs instead of more kind of risky stocks. So that will definitely help you kind of narrow down your stock/ETFs to invest in there. And second of all, by setting a goal as well, it kind of keeps you on track. And even if things aren't going to plan, or even if they're doing very well, it kind of keeps you boarded or grounded. And again, just keeping that goal in mind of once it hits that certain percentage in the green, you can start taking your profits. The second point to consider as a long-term investor is, does it already fit your current portfolio? Now, this obviously only stands if you already have a portfolio at play and are looking for new positions, just like me. And even you can see on the left here, just an example, how many different pies I have for different sectors. We have about 12 or 13 pies overall at the moment. So this portfolio is fully diversified. Well, not fully, I suppose you can never be fully diversified. But again, we have kind of our hands in all different sectors across the board, and even have the 2 main ETFs as well, in the form of the FTSE 100 and the S&P 500 as well. So again, I'm very happy with how we're actually spread across the board here, and this is very important as a long-term investor. But again, it's worth noting as well, if you're considering buying a new stock, you don't want to overload in one particular sector, or you don't want to be underweighted in another. For example, if you have, say, 10 stocks overall in your portfolio, and they're all in the financial sector, you don't really want to buy an 11th stock in the financial sector as well, because you're really kind of setting yourself up for failure if that sector does fail. So you need to ensure that you're spread across the board in terms of diversification. Also, in terms of fitting your overall portfolio, it doesn't just need to be diversification you need to consider here. It's also how many stocks or ETFs you want overall. Now again, there's no magic number here, and there's no actual correct number. Some people say 10 stocks is enough to be diversified, some say 20 and others 30, and some even say 100 stocks. Again, Warren Buffett famously said that kind of diversification is a protection against ignorance as well. But again, there's no magic number here, and currently I have 33 holdings as I stated, and I don't feel that's even too much, but some people might think it's too much or too little. But again, you need to consider all of these factors when looking for new stocks as a long-term investor. The third point you need to consider is how much capital you have at play and at your kind of willingness to invest. Now, for example, this kind of hits 2 points here as well. First of all, dollar cost averaging, and second of all, fractional shares. Now here we are on DeGiro, another platform that I'm currently looking into setting up. Well, I'm currently already have an account, but I need to sort out my bank details here as well. But for example, if you want to invest in the likes of Amazon, you cannot buy fractional shares on DeGiro. That's kind of one thing why I'm kind of disappointed with this broker. Whereas on Trading 212 you can. But with DeGiro, for example, most people won't have $3,682 to invest in one share of Amazon, especially as a beginner investor. And again, even if you did have that amount, you don't really want to put your whole capital into just one stock. So again, that's one thing you need to consider here. If you're on Trend 2 and 2, for example, you can buy fractional shares, so that problem or issue won't arise there. But again, another point on this as well is dollar cost averaging. Now, if you've seen any of my prior videos, you know I'm a strong advocate for dollar cost averaging and buying on the dip, and patience is key here as a long-term investor. So you need to have some cash at your disposal as well. And I wouldn't dive right in to buy one full share. For example, if you did have this amount here on screen, I wouldn't be investing it all at once. That's the importance of fractional shares, because I'd only drip feed capital in, because if the stock goes down, you'll have money on the sideline to invest further and to take advantage here to get an overall cheaper cost. So certainly you need to ensure you know how much capital you have at play before considering what stocks to buy as well. Even for myself as an example as well, I'm kind of coming to difficulty here as well on DeGiro, because you can't buy fractional shares as I just stated. And if I do want to start off a portfolio here, I don't want to do anything crazy, because I do only have a limited amount of capital to invest on DeGiro, because we already have nearly 10,500 on trading 212. So I just wanted to start off with a few hundred on this platform. But again, that really does limit down my options on what stocks I can buy, mainly because you cannot buy fractional shares. So certainly you need to consider this going forward if you're looking to invest in what brokers you're going to use as well. The fourth point you need to consider as a long-term investor is looking at current prices. Now, as strange as it may sound, you do not want to buy a stock that's up so high on their 1 year chart. For example, we can even see here Goldman Sachs, we are up 90% here at the moment. My average cost is $199 and it's currently trading at $374. So, for example, here I would probably avoid this stock. If you looked at the 1 year chart, even if you're a long-term investor, you're probably better off looking for more blue chip companies that are down in value at the moment, because long term you'll make even bigger profit. Now, again, it could easily keep going up in value here, but it's fairly unlikely to continue going straight up in value. There will have to be dips at some stage. So again, you need to consider what current prices, even on the 1 year chart as well, how it's performing at the moment. I would be kind of considering looking at other stocks, which we'll have a look at now in a few seconds in my portfolio, that I would consider a better investment than Goldman Sachs at the moment. For example, there's many stocks in my portfolio, even on the 3-month chart or 1 year charts, that have had a bit of a dip. Again, a dip about 10% over the last few months or so. So I probably consider those kind of stocks a better investment instead of ones like Goldman Sachs, which is up 90% at the moment in my current position. Now, this is only recommended in blue chip diversified stocks. I wouldn't be recommending this in volatile stocks at all. But again, time and time again, you can see blue chip diversified well-known companies are going to come back up in value as time goes by. And as a long-term investor, time is definitely your friend. So again, this is only for when your initial investment. From there on in, again, it's important to have a cash reserve. But from there on in as well, you can just wait for dips and continually buy in tiny amounts of shares. Now, that's the importance of fractional shares as well. If you don't have a lot of capital at play, you can slowly drip feed money in to get your overall average cost down and down over months as the cycle goes up and down in value. And the fifth point you need to consider as a long-term investor before buying any stock is probably the most obvious one, and that's you need to do your own research before investing any of your hard-earned capital. This goes in terms of catalysts, fundamentals, etc., analyzing charts, and you should not be buying hype in any stock and need to do your own due diligence before investing any of your hard-earned capital. And you shouldn't trust or follow advice from anyone on the internet, even including me, as I'm not a financial advisor. And you need to kind of like everyone has the opportunities to get just as good as information as any of these so-called experts these days, especially in the age of Google, etc., that you can literally type in any stock and you can have reams upon reams of information on the stock to do your own research and evaluation on a stock. There's many great places to get information, and accurate information that is, especially on fundamentals, etc. And one I usually use is Yahoo Finance or Investopedia, etc. And that's not an exhaustive list at all. There's so many brilliant kind of links and websites out there to help you make your investment decisions as well. Now, as a long-term investor, it's quite obvious as well, but patience is definitely key, and boring is actually very, very valuable here as well. Boring and patience will make you the most money as a long-term investor, though we've seen over the past year or so, since a lot of new investors, again, just like myself, have jumped into the market. A lot of people have jumped on the hype train in a lot of these so-called penny stocks, or even the electric vehicle market, etc. And most of those, again, I can't speak for everybody, but most are after getting burnt and are probably no longer investing, mainly because they jumped on the hype train and trying to get that big, quick initial kind of investment or capital gain. And as a long-term investor, you kind of get out of all the hype and you don't need to follow the noise as such. It's just kind of slow, consistent blue chip growth will make all the difference in your long-term investing. So that's my 5 kind of tips or tricks in terms of what you should look into or consider before investing in a long-term investment in a stock or ETF. I'd be very interested to know any other kind of things you look into before investing. This is only 5 and definitely not an exhaustive list at all. You probably have 15 to 20 on this list. But again, I'd be very interested to know your 5 or even 1 or 2 extras that you would consider putting into this list in the comment section below. So thanks very much. That's the end of today's video. I will see you all tomorrow.